So welcome to today's presentation on supply and demand from me and the FP Markets team. We sincerely thank you all for taking the time out of your schedules to be with us today. As this is really an introduction to supply and demand trading, I'll be keeping it reasonably basic for the benefit of any newer traders present. Next Thursday, we'll have part 2, where we'll be looking at the concept in much more detail and reaffirming today's concepts. I must also point out that what I show here today is largely a collection of study which I've found to work over the years. So I'm not here today to say that another supply and demand trader is wrong or right. It may appear similar to some traders and completely different to other traders. Before I continue, if you would be so kind as to, and please just let me know if I'm coming across loud and clear and the welcome slide is visible. Also, feel free to let me know your experience with supply and demand trading. Have you used it to trade? Are you currently using it, for example? Excellent, thanks guys. Let's see you coming through loud and clear. Good, good, good. Excellent. Good morning all. Morning. Okay, look, although I see a lot of regulars here. Excellent, thank you, Daniel. There's a lot of regulars here, which is great. For those of you who don't know, my name's Aaron Hill and I'm one of the market analysts here at FP Markets. As I say in other webinars, I've been involved in the financial markets since about 2010 and have largely been obsessed with the tech side of trading ever since, mainly price action. I also completed CMT levels 1 and 2 and enrolled on level 3 this year. So any questions on this program, please do feel free to ask away nearer the end of the webinar. I know I do this every webinar and likely sound, like a broken record, but please let me just quickly run through the disclaimer on screen. So the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. FP Markets does not give any warranty to the representation as to the accuracy, reliability, or completeness of the information contained in this material. Okay, we have a few comments here regarding supply and demand, just really quickly. Good, it's all loud and clear in demo. So there's some guys here. Guys, look, when I say guys, I'm referring to both male and female. So that, yeah, so when I say guys, I'm referring to everyone. So look, we have some guys here in demo for about 1 year on supply and demand. That's good. You must be an intermediate trader then. New with supply, some are new with supply and demand trading. Excellent. So we've got a mix here. Look, regarding this disclaimer, at its core, what we're saying here is this webinar should be considered as an educational piece and not direct investment advice. Now, as for the session's topics, to kick things off, I will do my best to describe supply and demand. It will be here. I'll also introduce you to 4 basic configurations you will find on the charts. And as for liquidity, we'll try and deep dive into the psychology of how supply and demand areas form on the chart and look at why they sometimes hold price on return. So with this basic understanding, at this point, I intend to take us over to the live charts and discuss some chart-based examples. and which will also be a good opportunity to also discuss the basic entry and exit techniques. I'll then round things off with a Q&A session. So, and guys, as I say usually in my webinars, if I'm unable to answer all my questions or you're unclear on anything today, please go ahead and email me and the research team at marketsanalyst@fpmarkets.com, and we'll get back to you as soon as possible. Also, as always, if you have a topic you wish us to cover in future presentations, send us across your ideas and the team will look at putting something together. And guys, please do remember a recording of this of the webinar will be available through the FP Markets website and on FP Markets YouTube channel. The support team here will also send out an email after the webinar concludes with instructions on how to go ahead and access the recording. Now, as I'm sure most here will know, most regulars here will know, I try my best not to flood my slides with bullet points and simply read them back to you. You know, for me, this just seems a pointless exercise. Anyway, so what is supply and demand? First off, it's important to understand that a market is any place where buyers and sellers meet to exchange goods and services. So think of it as buyers and sellers willingly making a transaction. Look, I'm sure most of us already know this. Look, so the law of supply and demand is, shall we say, a theory highlighting the contact or interaction between sellers of a product and buyers for that product. According to market theory, the relationship between supply and demand balances out at a point in the future, the equilibrium price. So as a very basic example concerning the law of supply, let's try and think about it this way. When strawberries are forming, or shall I say growing, a constant supply of water is needed to produce them. Should a drought form and very few strawberries are then available, people want strawberries more than what's available, right? So the price of strawberries will usually increase dramatically as a result of this. Look, an example behind the law of demand is say a famous artist passes away, the supply of that artist's work will obviously come to an end as well. Therefore, demand of his or her artwork should increase as people want to purchase the few last pieces that exist. Now, supply can be thought of as the amount of goods being sold onto the market by producers. At a higher price, this will obviously be more profitable for suppliers. Demand is the quantity of the goods that consumers wish to buy at different prices. You know, at higher prices, less will be demanded. As prices fall, more of that good will usually be demanded. Look, before I put everyone here to sleep, I'm no economics professor, and I'm sure you're not here for supply and demand 101 in economics. So I just thought it would be good for newer traders as a basic intro to what will follow on the charts, as it's pretty much the same thing if you think about it. So what is supply and demand on a chart? Now, as I'm sure you're aware, many traders here that do trade supply and demand will have found a number of different definitions to locate this on the chart. As I said at the beginning, this is my way that I've found to work over the years, and it's proved very simple to locate areas of interest. So before I get into the formations that exist, I'm trying to think of the easiest way I can explain this so you have an idea of what to expect before I bombard you with my rather dazzling graphics. So look, for me, supply and demand is an approach based on technical analysis, specifically price action. This is something I've had an interest in for many years and developed a number of techniques to help locate, shall we say, the more rounded areas to trade. This is not to say each area I select works out. It is just I have developed what I believe the skill to pin down areas of supply and demand on a chart over the years. Well, as I said already, while several interpretations exist concerning structure, technical supply and demand zones on a chart can be defined as noticeable price moves out of an untouched or I guess I should say untested base. This will become clearer in a few seconds, guys. So on charts, on all time frames and in all markets, supply and demand can be viewed by way of zones or as simply a base. It is believed supply and demand areas work due to unfilled orders left by institutional traders at the base. Now, guys, I have to be clear, there is a story around supply and demand areas. This is not simply we jump on charts and look for areas that produced momentum out of a base and that's it, we trade the return. It's not the way I found that provides the most beneficial areas. Of course, when I first started looking at supply and demand, this is what I did, and I failed miserably as a result. So as you can see on the shown on the slide, we have 4 basic configurations, okay? And let me just see if I can get my pen. Okay. Okay, excellent. So as I said, we have 4 basic configurations. We have the rally base rally, we have the drop base drop, and we have the drop base rally, and we have the rally base drop. I know this is a mouthful for newer traders. Let me just see if I can delete that actually. Okay. I know this is a mouthful for newer supply and demand traders here, but it should become a lot clearer as we progress today. So for ease, we have the RBR, the rally base rally. So a rally base rally. We have a drop base rally. I normally refer to these as DBD, and then we have the drop base rally or DBR and rally base drop or RBD. It's just shorthand really, guys, nothing more. So these are the common terms associated with supply and demand, though for me, and guys, this is only my personal preference, I concentrate most of my attention on rally base rally areas and drop base drop zones. They just seem to be positioned in the right locations for me to have confidence, nothing more. This is certainly not to say that drop base rally areas and rally base drop areas are not of use, because they are. In fact, a number of traders use those areas to trade. It's just my personal opinion. I focus on these 2 zones primarily, but I understand the workings behind these areas too. So look, traders essentially search for robust areas that form a healthy advance out of its formation. Now, a rally base rally zone is a form of demand and is established within a defined uptrend. You know, consecutive higher lows and higher highs, or at the beginning of a possible up move. So at the beginning of a trend change, after we've made the V-shaped trend change, we generally see rally-based rallies form. As you can see on the slide, this shows a price movement. Begins with an advance, transitions into a base, and then follows through with a rally to the upside. It's pretty basic stuff, really, when you think about it. It gets a little bit more complicated on the charts, but pre-drawn examples, this is what we're looking for. We're looking for an advance, transitioning into a consolidation, which subsequently follows through to the upside with strength. Just be mindful, guys, this is a continuation configuration. This is not a reversal, but yeah, this is not a reversal structure. This is a continuation structure. A drop-based drop is the same as a rally-based rally, guys. It is only the mirror opposite. And therefore serves as a form of supply and works as a continuation zone to the downside. Now, just to quickly go over this, we have the drop, which forms this part here, the base, which forms this part here, which follows through with a subsequent drop to the downside. Now, when I first started trading supply and demand, this is all I would look for. Nothing more. I didn't take into consideration the trends, the location, you know, the strength behind it. I literally did not focus on anything but this. And as I said already, it turned out pretty poorly for me. So hopefully this webinar will put you on the right track to not make the same mistakes I did. Look, a drop base rally now usually forms what's known as a bottom on a chart, or sometimes referred to as a cap. Its basic configuration is lower lows. So we have the lower lows, lower highs, lower lows, lower highs, lower lows. So we're in a downtrend at this point here. This is the drop, and which transitions into a base at this point here. Sorry for my drawings, guys. So this is a base. And what happens then, which we then transition into a follow through to the upside. It's at this point, we know we have a drop base rally, and that's what we're working with. This is typically a zone in which buyers find attractive. I hope you can see that, guys. So once price, or if price returns to this area, this is an area buyers tend to find attractive. Okay, so look, a rally base drop is the same as a drop base rally, only it forms in reverse and represents a supply zone which sellers are attracted to if price returns to the area. A point to note is that both the drop base rally and rally base drop are often viewed as reversal zones, as I've already said. Now, this does not mean they have to form at trend reversals, although they do. They can form within the prevailing trend. So imagine we have the trend here. This is the downtrend at this point, and this is your pullback. So they can form within trends, you know, to buy at dips and sell into rallies or pullbacks, if you will. Let me just remove those drawings just really quickly. Okay, so key points to be aware of. Strong movement. I look for strong movement to form out of each base, as I've already alluded to. Strong movement has to form out of each of these bases for me to initially validate either a supply or a demand area. An identifiable trend. Ultimately, the RBR, which is this configuration here, and the drop-based drop, or DBD, areas should form within an identifiable trend. I say should, but that's not always the case, as we'll see when we head over to the live charts, as there's always a story behind these areas. Okay, so duration. So how long has price been trading away from the base of either supply or demand? This is very important to consider, and something we'll go over shortly. But what we don't want to see is an area that's formed, so a drop-based drop has formed, and price continues to go all the way to the bottom, and then eventually comes up. You can't see that now, guys, but you get the drift. So we're coming up, we're trending higher, and all of a sudden we click back with this area here. Now, although price may bounce from this area, what you're doing now is you're selling into strength. You're selling into the sentiment, right? You're selling into the uptrend, which is not always the best place to be. It can work at times, but I would try to avoid it, particularly for newer traders. Okay, fresh. Now, a zone's freshness is also very important. I've seen quite a few definitions across the net regarding the freshness of supplies. Some are different from mine. I will provide you with my my definition shortly when we head over to the live charts. So its location. Now, excuse me, guys. Its location. Now, I'm not talking about its location within the trend, although that is incredibly important. I'm talking about where it formed in regards to market structure. Did the zone break anything of note, for example? Did it break another supply or demand zone? Did it break a round number? These are all clear. These are all pointers you have to look for and understand the story that's forming around our supply and demand area. A base formation. How are the zones formed? The bases? How are the, when I say base, I'm talking about this. Obviously, we have the rally, base, drop, base. How are these bases formed? Are they disorderly? Are they compact? Ideally, you want an orderly base. Look, I'll touch on that, but basically, the crux of it is we don't want to see a zone that's, for instance, we don't want to see a zone that does this and it's vicious. We've got no definition there. What we ideally want to see is this form, okay, a tight area, and then so almost like a bullish flag to a point. That's what we're looking for, a very tight configuration. The approach. Now, this is something we'll likely touch more on part 2 because it can become quite technical. Was the approach controlled or was it heavy? So was there strong selling into the demand, or was there strong buying into a supply, for example? Another point is the differences. So the differences between supply and demand and support and resistance. Although, I guess you could say they are essentially the same things, but I believe there is a difference. So I will highlight this as we progress, probably more in part 2, to be honest. One other feature I should have noted on here actually is we can use supply and demand to analyze the markets through a multi-time frame approach. Now, guys, if any of you follow my analysis on a regular basis, you'll note I do this all the time. I start from the monthly, daily, H4 and H1 timeframes, and I use supply and demand very regularly to pinpoint areas of interest. Guys, please don't worry. I have plans to go over all of these points in detail either today or in part 2. If part 3 is needed, we will look into this. Absolutely no problem at all. Let me just erase these drawings. Okay. Liquidity. So another important aspect to be aware of, I believe, is liquidity. I guess the more appropriate title for this section would have been the psychology behind supply and demand, or maybe even the order flow behind supply and demand. Again, guys, I assume we have our own take on how supply and demand areas form, and more importantly, why they sometimes bounce price action, which is what I'm sure most of us here are interested in. So a common theory is institutional movement. So the common theory is supply and demand zones form due to institutional action, the collective movement of big players. Liquidity. Liquidity which is the ability of a security to be traded on demand, so the willingness of buyers and sellers. So this is important to understand, as liquidity is generally tight within the base of your supply, or in this case demand, to form. Knowing this and understanding that large players are active within these zones, we can begin to understand that when large moves form out of these zones, these areas are possibly tradable upon return. This liquidity is therefore believed to be created by large institutional traders. What I'm talking about here are the large banks, the hedge funds, for example. These larger players cannot, like what most of us can, I assume, just enter their order into the market, as they generally trade in size. So they can use these small consolidation areas or zones to enter the market almost undercover, and they enter where they know liquidity is highly likely to form. I know this is a bit difficult to grasp, guys, I really do, and I'm throwing quite a lot at you at this point, but hopefully by the end of at least part 2, you'll have a more of a deeper understanding. And as I said, guys, please feel free to ask me any questions as we go through, or send me an email. It's absolutely no problem, and I'll reply as soon as I possibly can. Now, I'm not saying this is how supply and demand areas form, but this is the best explanation I have come across and does somewhat make sense. If anyone here knows of how these areas are 100% formed, please do let us know. But really, guys, look, the markets are made up of buyers and sellers, right? So hence why I believe what I briefly touched on makes sense. The main points I want to get across is a basic understanding. Of how that these supply and demand, basic understanding that these supply and demand areas are, I believe, formed by larger players. Hence why we should be interested. And obviously, I want traders here to understand how to spot these supply and demand zones on a charts with confidence. Do bear in mind that we cannot just simply, as I've already touched on briefly, we cannot simply pick any area on the chart and pray it works out. As traders, we need a structured and measured approach if you want any chance of success. Excuse me, guys. What I mean by that is we should, going into this looking just for areas that have produced momentum from a base. Yes, you will have some trades that will work, but you'll have a lot of trades that won't work, and that will lead to confusion and ultimately you throwing in the towel, which if you want this to be a career, you have to approach this as you would another career. It takes time to learn, and it's taken me years to understand that there's a story that forms behind supply and demand. I may not always explain or describe the story in my analysis, my regular daily analysis, because it just would take too long, fill up the page. But there is a story behind every supply and demand zone that you need to understand if you want to take price action seriously. One final point, we should never assume a supply or demand area will form. To be successful supply and demand traders, we do not anticipate its formation. We simply react. For me personally, upon the formation of a supply or demand base. So what I'm talking about here, this base here, we haven't yet seen the breakout. So once this is in play, we don't know if it's going to be a demand or a supply. It could turn out to be a rally, a rally-based drop, or a drop, or a rally-based rally. We have no idea. And we, as I said already, we look for a decisive breakout to occur. So we're on to the final. I don't see any questions coming through. Either I've confused everyone, or you understand everything I've already shown. But if there's no questions on anything I've shown already, excellent, really good, guys. Okay, so instead of going over more slides, I thought it would be a good idea to move ourselves to the live markets. And what I want you to do is try and bear in mind these points. Try and bear in mind these points, because this is how I look at the charts. I look to confirm an area. So I'm not saying that I have all of these boxes ticked by the to form a supplier. I look for between 60 to at least 80%, around 80% to confirm an area. Ideally, obviously, if you can have all of these within surrounding your supply demand zone, fantastic. You've got a very, very high probability traders as far as I'm concerned. We have one question: what is the best time frame to trade using supply and demand? That's a very good question. I don't know, to be honest. They work on, for me, they work on every time frame. I've not seen, you can go right down to the 1 minute time frame if you really, or the tick chart. You'll see supply and demand areas form. You can go right up to the monthly time frame and see them form there. As I said, the multi-time frame analysis approach, where you look at the monthly time frame. Look, guys, if you're in a monthly time frame supply area, for example, it's a very good chance that the sellers are going to try and make an appearance, right? So you don't really want to be buying at that point. This is not the time to be buying. Again, though, there's always a story behind it, so you need to take this. The story is at these points here. You need to take them into consideration. So for me, I like the H1 chart for finding supply or demand areas to actually trade, but I always take into consideration the overall story behind the supply and demand zone. Also, I want to show some basic entry and exit techniques. Also, if there are any areas you guys want to check out, please have these ready, and we'll go over these together on the live chart. So let me just spin things over to the charts. Guys, just let me know if you can see my chart that I'm showing. This is the euro pound, euro pound on the M30. Oh, excellent. Thanks, Sean. Right, so we are on the euro pound M30. Right, I know you can't see the points, the strong movement, the identifiable trend, the duration, fresh, location, base formation, approach, and differences. I know you can't see them, but let's just try and work with it for now. I'm going to try and take you through some examples. So, as I said, euro pound on the M30. Was this an area of interest? Also, guys, I'm sure you've realized this is a rally, base rally. Okay, these are the areas I look for. I don't look for the drop base rally zones. This is my personal opinion, guys. As I said, I always focus on the rally base rally zones or drop base rally zones. So, why would some of us not have likely taken this trade? Right, so on the plus side, we had strong momentum form out of the base. I'm sure we all agree on that. Strong, decisive movement forming out of the base. Let me zoom in so we can get a clearer look. So we had strong momentum form out of the base in the shape of one single candle. Another plus, of course, is the momentum out of the base did some reasonable damage. So look at what damage the supply or demand area did. So it broke some local highs. It also broke a, for anyone that knows here, a Quasimodo resistance, which is extended here. It piled through these local highs here. So by breaking through these local highs, and this demonstrates that buyers were active, were clearly in control, in the driving seat at this point. So if any unfilled buy orders remained at this base, we could see a reaction, right? Knowing that active buyers were present here, there could have been unfilled buy orders here, and we know there was. We know there was. This is a cherry-picked example, but this is not an example I would have personally looked at or shared. So, are we in line with the trend? Another consideration. We're not. So the major trend is to the downside. It goes further up. Okay. So the overall sentiment is to the downside. So that's a red flag, right? Another red flag would have been, for me, the duration away from the zone. We were away from this zone too long, in my opinion. This may have been fine for other traders, and you know, power to you if you traded this at this point here. It's a profitable trade. Very good risk reward. If you got in here and your stop was below here, all power to you if you can do that. That's fantastic. But for me, this was a red flag. We were away from this zone too long, forming successive higher highs, higher lows, higher highs, and higher lows. We formed the trend. So as we break this higher low here, we're in a technically a downtrend, right? And we don't really want to be selling into that. We don't, buying into that. That would be a red flag for me. A solid point, though, was the area was fresh. Now, fresh means simply, for me, I have two definitions of fresh. The area was not formed as a reaction off of anything. So it did not form off of a prior resistance turned support, which would mean it was simply a reaction. And price did not stab into the zone as we lifted higher. Okay, I hope that's clear, guys. I hope I explained that clearly. If price would, now look, the difference is if price would have immediately tested this zone at this point here, this shows this would have been a reasonably high probability trade to take. Because think of these, the easiest way to think about these are decision points, right? Decision points. Within this zone, there was a decision to break through all of this mess here. That takes money. That takes a hell of a lot of money to break through, to break higher. And we know these are large players involved here. So this would not have been an area that I would have potentially traded, even though it did react. We have a question: how do you determine the quality of supply and demand zone? So I determine the quality of supply and demand zones through the 1, 2, 3, 4, 5, 6, 7, 8, through the 8 points I highlighted on the previous slide. So the strong movement out of the base, the identifiable trend, the duration away from the zone, was the zone fresh, location, base formation, approach, and differences. Okay, as I said, we can go over this in part, well, we will go over this in part 2 to reaffirm all of these points. Now, I have another example on the, could you pull up the last slide so I can quickly screenshot it? Yes, no worries. Guys, yeah, that would be easier, wouldn't it? Just give me a minute, Sean. I'll just go back across to the slide. Guys, if you want to get a screenshot of this, go for it now. I'll move my cursor. Get a screenshot, grab a screenshot, and we'll move back over to the charts. Just give me a chance to have some water as well. Okay, I assume that was enough time, guys. I'm going to spin back over now. Okay. So we have one more example on the euro pound of the M30. This is a base drop example. And this, as we already know, forms within the overall trend of the market. So we have lower lows, lower highs, lower lows, lower highs, and we're in a consolidation point here, but we did form a lower low at this point, beyond this point here, which tells me there's strength still to the downside. Anyway, so we have the drop base drop. This is a really nice area, and there's a lot to this story to take into account. So I'm sure you can see we have strong dominant downside momentum formed out of the base, indicating seller intent and therefore the possibility of unfilled orders being left behind. What are these unfilled orders? I keep saying this, but I'm not really explaining it. So it's simply if price moves rapidly from an area, from a zone, larger players may have orders that were left unfilled. So in this case, offers were left unfilled. So when I say offers, I'm talking about pending sell orders. Were left unfilled. So and once price returns to this area, given the factor of duration, this of course assumes the reaction. This of course assumes that the unfilled orders were not removed. We'll never know that. That's impossible to know, isn't it? But the only way we can do this is by looking at those points. For me, anyway, looking at those points to determine the highest probability zone. We work with probabilities, guys. We defined by a back-tested strategy that has an edge. We do not guess. This is a business. We need to take it seriously, and to do that, we need to put in the effort. It's not a game. It's not a hobby. If you're putting in 30 minutes a day on chart work, you've got a very, very slim chance of making it. You're probably going to throw in the towel. That's just me being totally honest and blunt. But this requires a lot of work, a lot of dedication to get to a level where you can potentially profit from your efforts. So the duration away from the zone was a perfect distance in this occasion for me. On this occasion for me, it was not too long, it was not too short. Interest in the zone therefore remains. So interest in the zone, what I mean was the unfilled orders are likely, I say likely because we work with probabilities, guys, are likely to be still contained within the area. I know many say the market has a long memory, and I do agree with this on some points. But what I have found with, this is me again, what I have found with supply and demand areas is the zones that are left untested in the long term are very often not much use for us traders. As when price returns to the zone, it's likely the overall sentiment will be against us, if that makes sense. I did briefly touch on this earlier. So the trend will be against the base working out. So you'll have a number of strong, potentially strong sellers going against your demand and a number of potentially strong buyers going against your supply. Now, I try to avoid these zones. This does not mean they do not work. Some of them do, and some of them produce hefty returns, but I try to avoid them. That's just my personal opinion. So what did this zone achieve? What did this area achieve? So what did momentum out of the base, what damage did it do? If we look at the local low here, we can see it cleanly swept through this local low here and also took out this area of demand. I'll draw this on the chart there. Now, when we get a demand of this, so this is what I mean by a reasonably disorderly demand. You can, it depends. For me personally, I would have probably looked at around this point here to mark my demand because I would have tried to ignore those wicks there. It's just too disorderly for me. So again, going back to this supply here, what you would have seen is the downside momentum from this base whipped through this local low here, lower low, and also swept through any buying interest through this demand. As you'll note, this is a prime demand as well, but had many things against it, telling us this base is not somewhere we should be looking for long entries. And what you can see with this demand, as you can see, we took out, we strongly rallied to the upside, taking out this high here and a Quasimodo resistance to the left. Okay. This, for me, personally, no, we're with the trend as well. This, for me, is enough to qualify this zone as a possible base to trade. Now, you'll look. So, I could go into more detail here, and I'm trying to be careful because I don't want to really confuse newer supply and demand traders here, but practically everyone here will know round numbers contain a truckload of orders, right? We learned that from day one. Round numbers, fade round numbers, buy the breakouts of round numbers. We all know this, right? Round numbers, psychological levels, big figures, whatever you want, whatever you term them, there are orders around these levels. Big players know this, we know this, yet a lot of retail traders still take these into consideration. I personally would only include. I rarely look for trades around round numbers. What I do look around at round numbers for is the liquidity, the momentum the orders offer me. I don't look to trade these round numbers. I look for what's above and what's below these round numbers, if that makes sense. So I look for the stop runs that accumulate around these areas. I don't look to trade with these traders that are trying to fade these round numbers and things like that, or even buying the breakouts, to be honest. So, as you'll note, we had the price is 8,600 at that point here. That's around here. So we have this area here. We come down. So that's another point. From this supply, we broke through a round number. We broke through the local low and the demand. There's 3 points we broke through there. It would have been fantastic if we had broke this major low here, this higher low here. We didn't. It's life. So we have the 8,600 round number. What happens? As we have a lower low, what do you think traders are going to be looking to do at that round number? They're going to be looking to fade the round number. What I mean by fade is sell from that round number with their stops placed where? Just above the level. 10, maybe 10 pips, right into our 10 pips, maybe 5 to 10 pips, right into our supply area. Thank you very much. So, not only are the protective stops from these sellers triggered into buy orders, we also have breakout buy orders, breakout buyers, right? So once we get the breakout, so this breakout, let me zoom in. So this large candle at this point here breaks through above the round number. What does that do? That tells breakout buyers we're in here. This is potentially a breakout. These are traders that are impatient, that really need to get into the market, so they buy. Usually, and also you'll find that there's a lot of buy stop orders above the round number, which is a common order type breakout traders use. So once they're triggered, we've not only got buy orders from the protective stop loss orders tripped from the sellers trying to sell the round number, we've also got breakout buyers buying into it. So that you've got all this momentum is helping to fill all these unfilled orders here. Okay, I hope that makes sense. So the breakout buyers, the protective stop loss orders, which are now sell orders, are flooding these unfilled orders. Now, it's impossible to tell whether the breakout buyers or the momentum derived from the protective stop loss orders, the buy orders, will overwhelm the unfilled orders. It can do at times, of course. This is trading. But it makes sense, right? Logically, we've got all these areas filling these unfilled orders. So we want to be a part of that, and this involves selling at these points. I hope I haven't confused too many traders with that. So as you can see, guys, this is not simply finding a base and that delivered some momentum, right? We want to look. There is a story. There is a story behind that needs to be read. And we have to take into account each chapter that story is telling us. Now, I see some questions. Just give me a second, guys. I do combine it, I assume that's supply and demand, with Fib levels for higher probability trade. Yes, you can. Of course you can. I mean, it's up to the individual trader how they want to determine these areas. But I rarely with the 8 points that I have, I found that of course that the Fibonacci will add weight to the area, but I found with these 8 points that I look at and try to understand the story behind it, the psychological story, the fib level, it's usually not necessary for me. More power to you if that can add weight to an area. I'm not sure if you guys saw, but there was also another supply area above this zone here. Oh. Okay. Now, what this did was, it had a sharp move down and broke. What did it break? It broke a demand. Now, what did this demand do? This demand is important, right? Because it was initially where the origin of the highest high, the previous, a major top, or not a major top, but a reasonable top on this chart, right? So this is an important area, a very, very important area. So with this area being a decision point to break through this zone, we know with a high probability that this zone here, upon retesting the zone, knowing we're with the trend as well, there's a very high probability it's going to hold, and hold it did. It held on numerous occasions. Yeah, so I hope some of you guys did see this zone just above it. But as I said, guys, there's a story. We need to read it. We need to understand it. We need to understand part of the psychology on the charts and where the orders will be placed, will likely be placed. Okay, yeah, again, guys, look, entry and exit, basic entry and exit rules, techniques, I would say. You enter, if you're conservative traders, enter on at the underside of a supply or the upper edge of a demand, and place their stops above 2 to 3 pips. That's this common 2 to 3 pips above the supply. Now, if you want to be really cheeky, you can go down to the lower time frames and look within this area for another fresh supply zone and trade that. This can really increase your risk reward on the trade. So a small move like this, not really a small move, but a reasonably small move can deliver really strong returns on one trade. Okay, I think I've gone over enough on this chart. I've got one more chart to show on the Aussie dollar again. Sorry, Aussie yen on the H4. Again, this can be found on every trade. But look, I'm really going to say the same as what I've already been saying on the euro pound chart. This is a drop-based drop. The only issue with this I had was there was also this area here, right? I'm sure you guys could have seen it, this small kink here. This is also a supply for me. But given the decision point was out of this zone here, I would have been looking at this. However, if you wanted to be conservative, you should really include that. This is what's commonly known as stacked supply or stacked demand. This is stacked supply, right? So we have an area here and an area stacked on top of this. Same for demand, stacked on top of each other. So if you're going to consider stops, conservative traders will be looking above this zone to avoid being whipsawed out of a trade, because the price could very easily at this point come above this, right, above this area here, and easily still be within my rules. Now, what did we break? The strong move to the downside broke all of these lows, and these are clearly very important lows. Why are they important lows? Because they formed a major high, reasonably major high, not a major high, what's I'm saying that word, a reasonably strong high, which delivered, yes, so it broke something considerable, and I think, but this was against the trend. This was against the trend. The overall trend is, look, it's strongly higher. All right, so. But the position of the area, knowing it had enough power to force below these lows, given that these lows were the origin of the reasonably extreme high, this would have been somewhere you could have looked to take a short trade. As I said, this area is against the trend, but the position of the area and what it achieved at the base of the zone, it was an area of interest. Okay, as it's unfolding, we have a question. So guys, look, this is all I have to show. We're nearly out of time actually, so I'll answer any questions you have. Yeah, so we have one. As it's unfolding, how do you know if it is a drop-based drop or a drop-based rally? You don't. It's impossible. When you mean forming, do you mean? Let me just spin back to the euro pound. So, do you mean? Who asked me that? Was it? I think it was Henry. As it's unfolding. So I assume when you mean unfolding, you mean within this space. It's physically impossible to understand what's going to happen within this area, if that's what you mean. I did say this during the presentation. I think at the beginning you might not have been present, but this is here. It's nothing. You should be looking for the long, the decisive momentum out of the base to even begin considering a supply or demand zone. So within this area, you have zero chance of knowing. This is just my opinion, unless you've got a crystal ball there somewhere that can tell you. But even then, you're still going to have to wait for the retest, aren't you? So look, no, you can't. That's the short answer to that, Henry. It's impossible. So question from Anthony. I understand the need to show examples of supply and demand on historical charts. However, it's relatively easy to analyze the past. Can you apply this on the current price chart at the right hand? Yeah, very good, Anthony. That's good. The only reason I showed cherry-picked examples, Anthony, is because this is an introductory piece. And I totally agree with you, Anthony. I totally agree. This is an introductory piece, and I just wanted to get the 8 points I look for across. And of course, that's why I asked at the beginning, before we flipped over to the live charts, if anyone has any charts they're looking at, if you have any areas, you want me to look at, I'll be happy to do that. But in part two, I intend to be looking at, so here's one here now on the euro pound that's just recently formed. This point here. This is somewhere I would be looking at. Why would I be looking at this? Now, guys, this is not me telling you to trade this area. This is purely educational, okay? This is an area that would catch my eye. Why would it catch my eye? We know we're in a reasonable uptrend, and the momentum out of the base broke these peaks, right? These lower highs. These are important to me. Why are these important? Because this was also a supply zone at this point here, right? We had a supply that also broke something to the downside, also broke all of these lows. So this is a decision point. This is a decision point, the decision point to break higher. So we have created, what they have created, or the charts have created a demand zone that broke through a supply. So what we could be seeing is, if, oops, I'm not sure about the color of the, we could be seeing this form. Now, do be aware this is a very quick example, but this is something that would catch my eye, and I would look into this further. This is something, again, you could use for, as I think it was one of the attendees said about looking at Fibonacci to benefit the area. But is there any psychology happening at this point? So we're at the round number 86 at this point. We've broken above that. So to come back down there, I don't really see anything telling me to buy at this area other than the. So look, if we come back to this point, at this point here, and come down, this could be an area of interest. We see buyers make a show. So yes, Anthony, in part two, I hope to look at more live trades, if that makes sense. This was just simply an introduction to help identify supply and demand, put across the points I look for, and yeah, so I hope we can take something from that. And in part two, if any attendees want to bring some examples they've seen work out. Also, if you want to look at my daily market analysis, I'm always, it's live there. It's live. I'm looking at supply and demand in a live setting there every day. I hope that answers your question, Anthony. Oh no, Anthony, I know it wasn't a criticism. Thank you. No, I know. But I totally understand what you're saying. So many traders, particularly on YouTube, they've got fantastic areas, and I was open about this at the start. These are cherry-picked examples, and yes, so this was just simply an introduction. We have one more question from Sean. You've spoken about supply and demand zones in both an uptrend and downtrend market, which all makes sense. How about a sideways market? That's a really good question, Sean. Sideways market, I believe that they can work as well. For instance, would you consider this a sideways market? I personally would. We've come up, we're now in a sideways market. So supply and demand can work within a supply and demand market, but if we know we're coming off the edge, so as I said, we're looking for decision points, right? So if there's a decision point within this zone formed, which we have here, there's a high possibility we could bounce from this area. That's not to say that this has enough power or enough influence to break out to the upside. This is just an area that we can look for. This is something I was going to touch on more in part 2, Sean. I hope that answers your question. If not, please do let me know. Okay, guys. Other than this, I don't. Okay, excellent. So yes. Unfortunately, that is all we have time for today. Look, I hope some of the newer traders here were able to walk away from this, this presentation more knowledgeable. As always, if there are any specific topics you would like to talk about, please send your suggestions to marketanalyst@fpmarkets.com. Also, be sure to register for the FP Markets Telegram channel to get instant updates. One final point, please be on the lookout for July's webinar. We have supply and demand part 2, as we've already discussed, next week on Thursday. Then on Tuesday, July 20th and the 22nd, we'll be looking at chart psychology. Now, this is something I'm very passionate about, chart psychology. I did show parts of this within this presentation with the round numbers and the orders, psychology around these areas. And so we'll also be using what we learned from supply and demand within those chart psychology webinars. And I also have a webinar on backtesting. I see a lot of questions asked about backtesting, traders not understanding how to correctly backtest. See, there are two types of, in my opinion, there's discretionary and there's non-discretionary traders. We are probably partial discretionary, which means we find signals from charts and we decide whether they're good enough. But there's different ways you can backtest, especially for discretionary and non-discretionary traders. This webinar is at the tail end of July, if you're interested, guys. Anthony, when are your live webinars? Yes, so I did briefly say the dates, but you can go on to the FP Markets website under, I believe it's under resources, click on education, find the webinars tab, and you'll see, I think the names of all the presenters are there and the dates as well. Okay, on that note, guys, thank you all so much for taking the time out of your day to attend the presentation. As I said, I really hope you took something from it. Yes, so please go ahead and look at the webinar, the replays. If you have any questions, I'm always there for you guys. This is what we're here for. Please fire over your questions and I'll get back to you with a detailed response. Have a great day and I'll see you all again very, very soon. Goodbye.